Hi, I'm Patrick Weinert, founder of The Money Mission, and I help people like you achieve success with your finances so you can lead a more fulfilling life. In this video, we are going to talk more about the concept of value investing. In our previous video, we touched on some of the principles of value investing, particularly buying a company that has a good price-to-earnings ratio, and also looking at the earnings growth of a business. You know, if that growth is good over the long term, that's something that could make it an attractive buy. In this video, we're going to talk about the concept of return on capital. This is a principle that also falls underneath the value investing topic. And it's one of the principles that I use in evaluating a stock as to whether or not it's a good investment for someone who's looking at getting a good bargain. So as I mentioned in my previous video, I had some success in my previous work managing the Marine Corps' budget. And one of the lessons that I learned in that process was trying to get a good return on your investment. In the military, it was, hey, if I'm investing some money in a particular area, I'm desiring that to produce combat power or combat readiness for the military organization at large. That's an analogy with investing in the market today. If I put money into something, I want to get a good return on investment, and I want to do it at the minimum amount of risk. The concept of return on capital, or ROC, is the idea that how much stuff, how much physical capital do I need in order to generate a certain amount of income? So for instance, if all I need is $1 worth of tangible material in order to produce $1 of income in a particular year, that's good, much better than a company, say, that would require $10 worth of capital to produce $1 worth of income in a given year. So return on capital has been found and was pioneered by an investor named Joel Greenblatt. And Professor Greenblatt came up with this concept in order to show that in many cases, companies that have a high return on capital generally perform better than those that don't. Now, don't get me wrong here. I'm not saying to go buy a bunch of companies that have a high ROC and that you're going to outperform the market, or that one particular company is going to outperform another. But what I am saying is that if you buy a portfolio of companies with this as a data point, right? It's not the whole picture. It is just one piece of the puzzle. You can outperform the market and do so significantly. There's a website that I want to recommend you take a look at. It's called magicformulainvesting.com. magicformulainvesting.com. You can log in, set up a free account, and look at the companies that this website recommends. And it focuses on those companies that have a high ROC. The great thing about it is that you can set criteria in there for how big you want the company to be. If you want it to be a large cap or a small cap, it'll give you what it estimates to be the best performing companies with that data point in mind. So one example of a company is H&R Block. And for those that aren't familiar, H&R Block helps people, it does a service helping people with their tax returns. So H&R Block, you know, they have to lease office space, they have to pay tax attorneys, and they have to pay tax preparing experts, as well as, you know, back office support and computers and printers and whatnot. But the point is that a company like H&R Block, which provides a very valuable service to the public, doesn't require as much money up front or as much invested capital as a company like, say, Ford Motor Company or another car making company, right, which requires hundreds of millions of dollars in assembly line equipment, and you have to pay a lot more employees, you're required to pay a lot more insurance and workman's comp. There's a lot more that's required in companies that manufacture than ones that provide a service like H&R Block do. So you can see that there's a little bit of a disparity between how much money needs to be invested and how much of a return you get. What I want you to do is use this point that I'm presenting to you today as part of value investing as a data point. It's not the whole picture, but it's a very important part. Log in to magicformulainvesting.com, set up a free account, and what I want to do is in the next video, I'm going to take this return on capital concept and I'm going to take some of the other principles of value investing. I'm going to tie them together and show you how I evaluate a stock. This is stuff that I cover in my membership program. But in the next video, I want to talk to you about it in more detail in order to give you an idea of how I do that, in order to help you potentially do that too. As always, please post a question, a comment, subscribe to my YouTube channel, subscribe to my newsletter, which you can find on patrickweinert.com. And until next time, I wish you unlimited success.